Hey, what's up, everybody? It's Doug Shoemaker here. Just wanted to get you a little bit more data on that alert to lock that we issued just a little bit ago. Mortgage-backed securities opened this morning, actually doing okay. That was until about 10 o'clock. Around 10, the ADP report and the ISM report came out, and we saw mortgage-backed securities drop by about 13 basis points. Now, what you see now is they're actually down 18 basis points. What we mean by that is when you look at these candlesticks over here, to the right is the most current day. And we're kind of trading between these two levels here. The red line is the 25-day moving average, and the black line is the 50-day moving average of what mortgage-backed securities have been doing. They've been really squeezed inside of there. We were looking for today that the ADP report would have shown a little bit more weakness in the labor force, and that allowed us to believe that we might see mortgage-backed securities open above this 25-day moving average, and then we'd have all this room to the good because these moving averages or these Fibonacci lines, they act as floors of support or ceilings of resistance, meaning that it's hard for these bonds to break through that ceiling of resistance. But once they do, if there's nothing else stopping them, they can rise pretty quickly. Now, the opposite of that is treasuries. When we look at treasuries, you're going to see that they opened above this 50-day moving average here and have just kind of taken off. And the only thing that would act as maybe a ceiling would be this next moving average here, this 100-day moving average, they would probably rise to that point and stop. Just as you see all these candlesticks kind of following the trends of these lines, that's kind of what we were thinking. We were hoping treasuries would open inside this range or below this 25-day moving average. Obviously, that didn't happen. So we've gone ahead and issued that alert to lock, as a lot of lenders are probably repricing, meaning that whatever they issued their rates at this morning, they've probably gone up a little bit since because of what's going on with mortgage-backed securities and treasuries. So, hey, I hope that information was helpful. If you're closing within the next 10 or 15 days, you might want to consider going ahead and getting that interest rate locked just ahead of some of this volatility. But if you're closing outside of that 15-day window, I would say we're still at a carefully floating standpoint in that we could see this go the other direction at any time. Number one. Number two, it looks like even though the jobs numbers didn't come in as bad as we thought they were going to, they were still negative numbers. So most likely that labor force weakness is going to push rates in the right direction at some point. So, hey, again, I hope this was helpful for you. If you have any questions about how any of this might affect you, by all means, reach out. And if you are in process right now on your loan and you're not really getting any kind of advice as far as the market and what rates are doing, by all means, if you want to go ahead and private message me, I can have you send me your loan estimate, and I'll give you a complimentary session where I'll go over that for you. I'll record a video of any inaccuracies, or if there's any places in there that I think you could save, or if they're just doing a great job for you, I'll be just as honest with you. So, hey, again, I hope this information was helpful. If I can answer any other questions, please reach out. Have a great day, and I look forward to talking to you soon.